So here's a question that catches out thousands of landowners in the UK every single year. Do you actually have to pay council tax on a simple, empty plot of land? Well, the answer isn't as straightforward as you think, and getting it wrong can lead to some very expensive surprises. Let's get right into it using some great guidance from the expert tax advisors at ProTax Accountant. Just picture this for a second. You buy a plot of land, and on it, there's an old, completely derelict bungalow. You get your planning permission, the builders arrive, and they demolish the structure. What you're left with is basically a pile of rubble. And then, a letter lands on your doormat. It's a court summons for a full year's council tax. Now, this isn't just some made-up story. It's a real-life scenario that people face. It's baffling, it's frustrating, and it brings up a really important question. So where's the line? When does a patch of dirt or a heap of bricks officially cross over and become a taxable dwelling as far as the local council is concerned? Honestly, this is the absolute heart of the matter. Understanding this one distinction is the key to avoiding some pretty huge and unexpected bills. To really get to the bottom of this, we're relying on guidance that comes directly from the specialist advisors over at ProTax Accountant. These are the folks who deal with these kinds of confusing situations day in and day out, so their insights are absolutely crucial for finding your way through what can be a very murky area as UK property tax. Right, let's kick things off with the golden rule, the foundational principle of all of this. And you'll really want to remember this because everything else we're about to talk about builds on this one idea. It all comes down to a single powerful word, dwelling. So, council tax, at its core, is a charge on residential properties. It's the money that funds all those local services we depend on, the bin collections, fixing potholes, keeping the libraries open, that sort of thing. The absolutely critical point here is that it is not a tax on undeveloped land itself. The tax only gets triggered when there's a dwelling, which is the official term for a place someone could actually live. Now, here's where things often get a bit muddled. People hear property tax and they assume it's all the same thing, but it's really not. Council taxes for domestic properties, homes. Business rates, on the other hand, are for non-domestic ones, so think offices, shops, or warehouses. The distinction is actually quite simple, but it's vital. If you live in it, you're dealing with council tax. If you work from it, you're probably looking at business rates.
Okay, so if council tax is only for dwellings, then an empty plot of land should be totally exempt, shouldn't it? Well, not so fast. This is where what I like to call the ghost of a property can come back to haunt you. And believe me, this catches a lot of people out.
Let's break down the three main situations where a plot of land that looks empty can still land you with a council tax bill. First, there's that ghost liability. If there used to be a house on the land and it's been knocked down, the valuation office might still class it as a residential plot until you officially get that status changed. Second, think about your garden. Say you buy the little strip of land next door to make your garden bigger. Well, the council could decide that's improved your home's value and bump you into a higher tax band. And third, and you'll want to hear this part, especially if you're a developer, is as soon as the council issues something called a completion notice.
And here's a pro tip that has some serious financial implications. When the council says a property is complete, their definition is a million miles away from what a builder or a home buyer would call complete. We are not talking about a finished, decorated home with carpets and working taps. For tax purposes, complete means something much, much more basic.
Let's make this simple. Look at just how early a new build becomes liable for council tax. First, the moment the basic shell is up. That's the external walls and a roof. Then, when the internal walls are put in, even if they're not plastered. And finally, when the floors are laid. As soon as those things are done, the council can legally send you a completion notice. It doesn't matter one bit if there's no electricity, no running water, not even a single internal door. For a developer, this can be a massive shock to your cash flow. You might have planned for council tax to kick in 6 months down the line, but the taxman's clock has already started ticking.
Okay, let's step away from building sites for a moment and turn our attention to the vast majority of land we have here in the UK, our farms, fields, and forests. In this case, a totally different set of rules comes into play.
As a general rule, it's pretty straightforward, and it's been this way for a long time to support the industry. Land that is being actively used for agriculture or forestry is exempt from council tax. So that covers your crop fields, your pastures where their sheep are grazing, and managed woodlands. It's a cornerstone of rural land ownership. But here's the twist that surprises a lot of people. It's not really about the land itself. But, and it's a very big but, it all comes down to use. This table really says it all. The land itself isn't what's being taxed, it's how it's being used. So a grazing pasture is exempt, right? Its use is agricultural. But the farmhouse sitting in the middle of that pasture, well, that's a dwelling, so it's taxable. And check out that last example, a field that's used for a summer festival. The use has suddenly become commercial, so it might even attract business rates for that period. The key takeaway here is that if you change the use of the land, you can completely change its tax liability. All right, now for another really common and tricky area, caravans. As they've become more and more popular, not just for holidays, but for permanent homes, the tax questions have gotten a lot more complicated. So, what's the deal with that static caravan? It could be in a holiday park near the coast, or maybe it's just sitting on a private plot of land you own. Does it count as a dwelling that you need to pay council tax on? This is a question thousands of caravan owners grapple with every year. To work it out, let's just run through these 4 simple questions. First, and this is the most important one, is it your main and only home? If you live there all year round, you're on the electoral roll there, you treat it as your primary address, then yes, it's a dwelling, and you will almost definitely be paying council tax. Second, is it used only for holidays? If so, you're usually exempt. Third, think about the site it's on. If it's a permanent residential site, that makes it far more likely to be taxed. And finally, what if it's a second home? Well, that's where things get tricky, and the rate you pay will depend on your local council's specific policies. And here's a little did you know for you. It's not just about the caravan itself. Under certain classifications, even an empty, unoccupied caravan pitch or a boat mooring can be officially exempt from council tax. It's a specific exemption, so it's always worth checking that fine print with your local authority. Okay, we've covered a huge amount of ground here, from piles of rubble to rolling fields and caravan parks. So let's pull all that together now with the key points you absolutely need to remember and, most importantly, what to do next. So, what are the absolute must-knows from all this? First, council tax is for dwellings, not just dirt. Second, watch out for that ghost tax liability from demolished houses. Third, with farms and fields, remember it's all about how the land is being used. Fourth, for caravans, it really all hinges on whether it's your main home. And finally, the golden rule that beats everything else. When in doubt, just check with your local council. They have the final say. Now, it is really important for me to say that this has all been for general guidance. The information is up to date as of February 2026, but tax rules can and often do change. So please do not use this as the only thing you rely on when making financial decisions. Look, every piece of land is different, and everyone's situation is unique. For advice that's properly tailored to your circumstances, the best thing to do is always to speak to a professional. You can get in touch with the expert team at Pro Tax Accountant directly on WhatsApp, by phone, or just send them an email. And if you'd like to dive into this topic in a bit more detail, Pro Tax Accountant has a fantastic, comprehensive article on their blog. Just head over to protaxaccountant.co.uk to find it. And finally, if you found this helpful, please do think about subscribing to the Pro Tax Accountant channel. It's the best way to get more clear, practical guidance on the sometimes confusing world of UK tax. Thanks so much for watching.